Whatever happened to dividend protection? How can something like the stock of Macy's give you a 9.6% outside yield, even though the company's profitable and its balance sheet's improving? How can BP offer a 6.6% yield, even though they've got more than enough cash to keep increasing the payout while also paying down debt? Hey, why don't we just throw in Schlumberger, formerly the pride of the oil patch? What the heck is that stock doing with a 6.3% yield? Oh, and how about an ActionAlertsPlus.com name? How about Kohl's? Kohl's has been a total millstone around my charitable trust's neck. Makes me angry. Yet even down here with a 5.3% yield, stocks can't seem to get any real lift. Last week, I pointed out that dividends only protect the stocks of safe, consistent companies in this environment. Think utilities, non-retail real estate investment trusts. But for everything else, they're not putting up much of defense, are they? The problem, Macy's, BP, Schlumberger, Kohl's, they're all perceived as being growth challenged. In fact, Schlumberger is expected to miss the numbers, and Kohl's could do the same. So their stocks are seen as falling knives, and nobody wants to catch a falling knife, even if it has a notoriously BIG dividend. Same goes for those pipeline master limited partnerships, some of which have stratospheric yields, but no growth, and therefore no buyers. Utilities, on the other hand, they're doing great. A company like American Electric Power, Con Ed, they might not have a ton of growth, but their earnings are consistent, not episodic. Dominion might have a much lower yield than Schlumberger, just 4.5%, but it's the kind of stock that lets you sleep at night, especially now that they've closed on the SCANA deal. Nothing like a merger among utilities to give you a multi-year growth. That stock's a buy. So where can you find this powerful combination, consistent growth with high yield? Right now, my favorite is AbbVie, the drug company that's merging with Allergan to form a diversified pharmaceutical colossus that's much less hostage to Humira. That's their lead drug that's already started losing exclusivity in Europe. Again, though, because Humira only has a few more years of patent protection left, investors assume AbbVie's going to run out of growth. The stock plunged to the low 60s not that long ago, where it sported a 6.8% yield. Then AbbVie decided to take control of its destiny and buy Allergan for $63 billion in cash and stock. As the deal draws closer, Wall Street's starting to realize that the combined company will have some growth thanks to Botox, Allergan's eye care franchise, and maybe most important, their new pill for acute migraines. As the spokesperson for the American Migraine Foundation, I'm confident this pill will be a blockbuster. If you've ever had a terrible migraine, and millions have, you know there's nothing you can just pop into your mouth to quell the pain. I expect to get a vicious migraine tomorrow if it rains as much as the weatherman says. Weather person, I guess I should say. I'm sorry. This pill is on the verge of being approved, and I bet it will boost next year's earnings. Note to the FDA, I could use it now, please, along with millions of other people. Listen, in a market where money's rotating out of the fast growers and into stocks with decent dividends, although, of course, the Netflix may change that along the IBM, but let's just deal with today. I think that AbbVie is the way to go. And by the way, I think that it's got a lot more room to run. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.